Who's with me? Who wants to be with me? That's a very good question. Ashley Webster, Elizabeth McDonald, Brian Bremberg and Scott Martin. And Scott, to you first. Would you say that the worst is over?
For the next few days, probably, Stuart. But unfortunately, there's still a lot of things, I believe, unwinding under the surface. You know, we've talked a lot about these volatility ETFs that are out there. We talked about some of the mutual funds these last few days that have actually gotten, I'd say, a little bit extended in their positioning, and therefore actually got exposed to some of this volatility crash or this volatility melt up that we've seen. So, yes, for the next few days, I think the market's going to calm down. But I still feel like there's a tremor or two out there just because of this trade unwind that needs to happen.
Okay, hold on a second, Scott. Brian Bremberg, you told me earlier that you expect this market to break out and establish new highs later this year. Say it again.
It's a choppy ride up, but the underlying economy is so strong, Stuart. So it's going to be wild, but I think we're going to continue to move up. Look, unless the Fed blows it. If the Fed blows it, and I know that's a buzzer word, but if the Fed blows it here, I think you see even more volatility, like we've seen the last few days.
So, Scott, you don't intend to buy anything, given your outlook for maybe some unwinding of difficult positions. You're not buying anything at the moment?
So what we've done, Stuart, we bought some stuff on Tuesday. We bought some stuff on Monday, frankly, as well, on the close. And right now, we're kind of just hanging tight because as more research as we've done at KingsU, as we've looked kind of deeper into these volatility trades, and again, some of the funds that are out there, Stuart, that frankly are not being talked about very loudly right now, I just want to kind of lie in wait. But I do agree with Brenberg, that we are going to see this chop up over the course of the year because of the fact we have so many tailwinds for this market.
Okay, we've opened relatively calm, down 50, 60 points on 24,800. That's where we are. I've got to refer to this budget deal that's moving through Congress. A, it is highly stimulative. You're going to chuck a whole lot more money into the economy. But B, that raises concerns about the deficit. Scott, you've got to be worried about a $1 trillion deficit 2 years down the road, because that's where we're headed.
Yes, but I'll tell you this much. I was more worried about these deficits when the economy wasn't growing, when wages weren't growing, when, oh my goodness, we had this great economy on our doorstep and everybody was freaking out. You know, that was the time, frankly, to worry about debt. You know, debt is not a great four-letter word to say on TV. I can think of a lot worse ones. But debt is only bad if the economy doesn't grow. A lot of ways that we're going to see, I think, this economy develop in the next few years with policy and obviously the momentum we have here are going to help alleviate some of the pressures that this pile-on debt would typically provide us.
Okay, let's go through.
Down 100 now.
Down 100. There we are. Down 109, 115, 116. Okay.
You're out on a limb there, aren't you?
I was out on a limb, and I think the limb just broke.
Is it something I said?
No, it's me. It's me. Now we're down 120 points. Okay, but look, that's a half percentage point down.
Yeah.
Look at some individual stocks. Start off with Tesla. Are they going to be profitable this year?
Well, that's what Musk keeps saying. I mean, they've never been profitable on an annual basis. He also said, watch this, we are in a deeper level of hell than we expected. We got overconfident and complacent about the need to ramp up our battery production. They got to get more of those cheap, lower-end, lower-cost Model 3s out on the road and production ramping up there. That's the issue for Tesla right now. He's got a lot of ideas. He just needs to execute.
Market...
we all
still likes it. 347 on Tesla, up $2 this morning.
Because the cash flow is coming in, the free cash flow. I'm just looking at it right now.
Right, now look at Twitter, please. This company posted its first net profit, and as I said many times this morning, their year-on-year growth for daily active users is 12%. Very solid number. Scott, this is a real turnaround, isn't it?
Finally. I mean, gosh, you know, Twitter, what took you so long? I mean, they had so many opportunities over the last several quarters, and seemingly what was this boon for social media to turn things around, and they haven't. Twitter's been a tough stock, really, Stuart. You know, if you look at Twitter today, it looks great, but you look at it over the last couple of years, it hasn't been so good. I think this is an opportunity for folks, if they're in this name, congratulations, to get out.
You don't think, wow. You don't think this is the start of an upward move?
No. Look, I agree with Scott. Twitter's been down for so long. They've been such a dog for so long. They get a little bit of good news. You see the stock pop. But I don't see the long-term story here the way I see it for things like Facebook. So I do think Scott's probably right. This is a time to take your gains.
Well, it's interesting because the monthly user number, they actually lost 1 million. But the good news to that is internationally, it's starting to rise. And there's a huge market out there around the world. And if they can tap into that and get that going, then who knows?
They've got a pretty good spokesman. spokesman, as in President
Yes, they
Trump.
do.
Yeah.
He tweets a lot.
And the longer character tweets, right?
Right?
Yes.
I'm not going to call this settling down, but we're down 104 points as we speak. That's almost a half percentage point. Then we have CVS, their profit getting a nice boost from the tax overhaul. No response in the stock, though. It's actually down 30 cents. Sales at Yum Brands falling a bit short. Weak demand at Taco Bell, Pizza Hut. They also own KFC. The stock is down just 30 cents at 79. Kellogg, better sales. It's up nearly 2%. Tyson Foods profit nearly tripled. This again is because of the tax overhaul. The stock is up for nearly 5%. Big gain. The New York Times, digital subscriptions continue to grow, and that stock's all the way up to $24 a share, a gain of 2%. Viacom cut costs. It's making money. It's exploring a merger with CBS. Viacom owns Paramount Pictures, Comedy Central, Nickelodeon, MTV. Viacom is up 11% this morning. Cable TV networks powered revenue growth at 21st Century Fox, parent of this network. Higher costs related to sports programming and theatrical releases. That weighed on the operating profit, and the stock is virtually unchanged at 36. Amazon introducing free 2-hour delivery from Whole Foods stores to its Prime members in 4 cities: Austin, Cincinnati, Dallas, and Virginia Beach. It starts today. Is that a big deal,
Yeah,
anybody?
I think it is.
Absolutely. It's taking on Walmart, you know, and it's the high-end neighborhoods, and they get more data about what those high-end neighborhoods spend on.
Ah, yeah, the data. That's what they want, isn't
Yes,
it?
look, you have a picker in the store, gets your order, and what's interesting, then they give it to what they call flex drivers. These are like Uber drivers for Amazon. They then take it to the homes of the people who place the orders. It's fascinating.
Brilliant.
And you get it in 2 hours.
Yes.
No cost. 2 hours.
You get your kale
Everybody
in 2 hours and your salmon and cucucber sandwiches in 2 hours.
Fresh stuff.
Thank you,
It's
Liz.
amazing.
Yeah.
It's good. Okay. Now, this was a real shock when I read this. The United Arab Emirates bought oil from Texas.
What?
In the month of December.
This is a cool story.
Put your economist hat on for a second. This is the world turned upside down.
We are importing, less products from overseas at any time in the 45 years we've been tracking this. By 2029, we could be net exporters to the world, not import. More exports than imports. This is historically significant for the United States, and it's a sign of strength in the U.S. economy.
Yes.
Energy, and by the way, can we talk about cleaner forms of energy? Back to that nature story earlier.
Yeah.
The fracturing technology here. This is what we're talking about. This is what happens in a developed economy.
It's hijacking technology, right? And it's prying loose the Middle East and Russia's control of the oil markets. Watch what ExxonMobil is now saying. It's exciting stuff. You know how they're going to spend $50 billion in the U.S.? 2/3 of that is toward fracking wells, oil and gas development. So 2/3 is going to be spent finding via hydraulic fracking more fossil fuel deposits. So it's really it's a technology story which really cracked open the U.S. oil boom.
But it's also a political story. American dominance of the world energy market.
Less reliance on a troubled part of the world.
By the way, America now produces more oil than Saudi Arabia. I think we should note that.
Yes.
And delight in it. Come on. Look at gold. Relatively flat despite all these market gyrations of late. It's at $13.18 per ounce right now. Scott, you wouldn't touch gold or gold mining shares with a 10-foot pole, would you?
No, because, Stuart, gold's not behaving right. I mean, gold's supposed to be that safe haven. In fact, it's supposed to be, at risk of a buzzer here, that non-correlator in your portfolio. So what that means to you, thank you very much, predicted. It's supposed to, I asked for it, it's supposed to act like things that are not in your portfolio. It's not supposed to act like bonds. It's not supposed to act like stocks. Guess what, investors? It's acting like both. Therefore, it's not very valuable right now.
All right, I think we should be careful with the buzzer. We've got a lot of viewers in California, the West Coast. They're just getting up.
Now they're up.
You're killing us. And in Hawaii, they're still asleep. Okay, it's that time. I've got to say thank you to Brian and thank you to Scott. Great performance, gentlemen. Thank you very much indeed.